In about 5 minutes here, we'll get things kicked off. The Thinkorswim platform up there just so we can get all of our technology up and running. Again, starting here in about 5 minutes. We have plenty of support staff. Got questions tonight? Feel free. It looks like we've got Michael, Alex, Cindy already joining us from our trade support staff over here. Be more than happy to answer a few questions for you along the way. We're broadcasting tonight both in our WebEx technology. Additionally, we are also broadcasting over in the Thinkorswim trading application directly in chat room, hence us taking a few extra minutes to get some technology up and running tonight. So again, we're going to start here right at the top of the hour. You guys are probably joining us from many different time zones, whether you're on the West Coast, East Coast, where it's 8 o'clock. It's dinner time everywhere. 5 minutes. momentarily, just waiting for a few additional people to hop on both on the Thinkorswim platform and the WebEx, and we will go ahead and get started here momentarily. All right, welcome everybody to this evening's event. My name is Don Kaufman. I'm going to be the host tonight. Just doing a quick sound check to make sure everyone can hear me all right. Again, let me know if we are ready to go. It appears we may have had a little bit of a technology issue here just a moment ago. All right, testing, making sure everybody can hear me all right tonight. All right, ladies and gentlemen, if you can hear me, just raise up your hand there. I had a little technology issue there momentarily. It appears that we are back online right now. So again, excellent. I apologize for that. Kind of a strange occurrence there, but we did lose a connection there momentarily. Normally I'm here, and that's always our intention. However, again, appears like we're back up and running, ready to roll. So let's go ahead. Let's jump into it here. Making sure everything is back online and we are good to go. Looks like everybody can hear me. So with that, all right, making sure everybody can hear me also on the Thinkorswim trading application. Bear with me for one moment. Okay, as we get started here, again, my name is Don Kaufman. I've actually been working with both Thinkorswim and the TD Ameritrade Group for the better part now, almost 14 years, really since the inception of the Thinkorswim trading application. I originally started my career in Chicago as a market maker and a risk manager inside of Chicago, and ultimately I've spent now the better part again of 14 years thereafter helping not only build Thinkorswim, but really in educating a lot of clientele in really a broad array of different products, many of which things we are going to be discussing this evening. So again, if we're good to go, it looks like everybody is on board with us tonight. We will go ahead and directly into the bulk of tonight's presentation, which is, again, as we said, kind of everything options, option volatility, probability, and what that really means for you. As most of you are probably aware, if you've been watching markets over the recent days, what a difference a week has made in maybe your perspective of a market, as we're hitting a patch of what we would term volatility right now. In light of the fact the market didn't do in a tremendous amount, there was a huge amount of action trading days. Not to mention there has been a tremendous amount of action actually today in the midst of what seemed like a kind of a docile day. Nevertheless, I'm going to again jump into some of the details of that. So let's actually keep the bulk of tonight's conversation really to trading, okay, and or investing. So whether you're an investor, whether you're tonight's presentation really applicable to a very broad spectrum. Again, whether you're an investor, whether you're a trader, whether you have an interest in options really or not, okay? I mean, I guess like my forte, but as a trader, I look at products kind of seamlessly. Stocks and options and futures, whatever product that you might trade, okay? Many of us actually look at that as traders. We look at that and all of those products seamlessly. And what that ultimately entails, when I say I look, for example, I've brought up this is a bond product, which is kind of esoteric. Maybe some of you have never looked at bonds, never even heard of bonds, but here, oil. This is the premise of trading. Twitter. What's the difference out there? For the most part, in each product, and I like to use that term product because it's kind of a disassociation. In each product that you trade, in the end, you make a decision. You buy or sell something. When people get involved in options, they often discuss like, these options can be extremely esoteric, and the options themselves can be so confusing. But I've kind of come full circle in options. I started trading in the late 90s, and in the late 90s, when you traded in Chicago, like, it's different than it is today. Like I talk to people and they're like, market makers. What a market maker used to be doesn't even have any bearing on what it is today. I mean, it's a completely different business. I tell people when I first got involved in trading, it was more of a sport than it was a financial product. It's probably why I enjoyed it. And I mean, it was rough. It was, I'm not going to say it's as bad as playing a game of football, but it wasn't that far off. After 6.5 hours, you were exhausted. But it's completely come full circle. And when I say that, I mean what trading is today. You don't see any advantage per se of the counterparty or these market makers and trades when you look at a product like Twitter and it's the market. That just means this: you could buy something and sell something, at almost an identical price. The bid and offer, the marketplace has become so incredibly tight. Now, the reason I say I've kind of come full circle is that when I first started trading, and you look at all the different strategies that are offered on the Thinkorswim platform, there's verticals and back rates and crazy. When I say I've come full circle, in the end, you can pretty much just buy something or you can sell something. So what? You've got calls, you've got puts. What I am going to talk about tonight is what matters really the most in the markets, what the volatility and what the probability says. And that idea of volatility and probability, well, that's options. You know, I titled tonight's discussion, Everything Options, but it's not just about options. It's about market movement. It's about what's the probability of a particular event occurring within a market. And I can use Twitter for examples, and I can use really any underlying. With that, I always enjoy, hey, throw in an underlying that you might be interested in us discussing tonight, which is fine. Okay, I'll use Twitter for an initial example here, and then we'll kind of move forward from there. So the one thing I want everyone to know that's joining tonight, whether you're brand new to the idea of trading in general, whether you're brand new to options, that's okay. Oh, somebody already fired in Tesla. Oh, I've never heard of that before. That's good. Okay, being a little facetious, that's probably the number one stock that people are interested in right now is Tesla, the Twitters, Netflix. Oh, Netflix is, every trader has something that's evil entity to them. Netflix might be it for me. Anyway, with that, we're going to go through a couple of examples. But as I'm getting to this, I want everybody to know whether you're brand new to trading, whether you're extremely experienced, and everybody in between that, which is, you're all going to be able to grab something different from tonight's presentation. But I want you to know following this evening that we have a number of different kind of support venues for you. And it's important to me that I get to this because I want you to know right after this evening's event, people say, well, is this going to be archived under the Thinkorswim platform, which everyone listening tonight is a TD Ameritrade client, and you can download the Thinkorswim trading application used this evening. But so after pricing and trade analysis, but you type in my last name, which I've just done, which is Kaufman, Kaufman, load up probability volatility. Sessions of ability expiring theory. Pretty much name a topic. These are just a few older ones. Yeah, they're from like 2010. I left ones in there that I felt like were really poignant to the discussion from this evening. Just look through all the different things that we offer in there. The archives are immense. I mean, we've been around this business forever. One of the greatest educations is you just listen to some of the archives and you fast forward through the dull parts of it. The first 30 minutes of swim lessons every day is just about market up into it. Additionally, tonight, I'm also going to provide you guys email lessons at thinkorswim.com, general support email addresses. There's even going to be an email address at the end of the presentation that if you want a demonstration expressly on Thinkorswim before we actually wrap things up tonight. Let me open up to a full screen and let's take a glance at Twitter and let's start to look at what it really means in terms of volatility and probability. Okay. When most people, get involved in market, it's this like perception of what, or a definition of what they believe volatility is. Now, you're going to be hearing me later on tonight. I kind of almost use the term volatility and probability interchangeably because one correlates directly to another. You're like, well, what's volatility? What's probability? It's exactly where I often find even a rather experienced trader maybe has never been exposed to this, but at the trading firm I used to work at, this is how they drive perspective to their traders. And when I say drive perspective, this is how they actually go about, instructing their traders. Is they would go and they would actually explain what probability really meant. And to do that, you have to have a little bit of an understanding of volatility and a context of what volatility is. Okay. Get a little better, again, understanding. When somebody says volatility, what's the first thing you guys think of? And most people go, it's movement. Well, movement, that's not the wrong definition. It's just, when it comes down to it, that's kind of a secondary definition. There's several different types of volatility. And that term, volatility, gets thrown around like it's, that's what everybody, every market pundit on the TV, ooh, there's volatility. Ooh, there's volatility. Well, what volatility are they talking about? Are they talking about historical volatility? Historical volatility is the annualized standard deviation of past stock price movement. You're like, oh, that was not a very good, I didn't want to hear that one. What does it basically mean? The annualized standard deviation of past stock price movement. It's kind of a fun one. We could say that 5 times fast. It basically means in the past. Okay. Then there's another definition. You get implied volatility. Implied volatility happens to be the volatility that's derived from option pricing. Okay. Now there's one critically important logic to that. Okay. Now again, we're going to extrapolate data from options to be able to imply what the stock is capable of doing. Think about that for a second. When people look at options, even if you've never seen them before, when people look at options initially, they kind of look at it in this, like, again, this strange esoteric world. They're like, oh, the stock is trading at 43.40, close to 43.50. Now there's calls and there's puts. Okay, call gives you the right to buy, put gives you the right to sell. But what I'm getting at with this, first of all, there's a relationship between the calls and puts. What I'm kind of getting at 43.50, what is that option really saying? The option is putting a price tag on risk for a given expiration date. That's the key point. Options put a price tag on risk. There's options now, 2 days out, 9 days out, 6 30 days out, 30 weeklies intimidate you. Things are in red. Option. Okay, but it's for a weekly expiration. Could be faster. Periods of time. What options are good at? Options are good, okay, at really pricing risk, for instance, 16 days into the future. So what we're going to do, and we're going to learn tonight, is if you take option pricing is likely to tell you of, quote unquote, what's expected of the stock. For example, and somebody says, how can I trust option pricing? Don, 20 million shares. In shares can't be wrong. Well, yeah, 20 million shares. They buy it, they sell the 20 million shares, and that derives a price. In the end, price is supply and demand. If you go under option statistics, almost 40, we'll call it 44,000 options traded. Now, each option contract can actually be thought of the equivalency of what? Okay, of about 100 shares. You start to realize it's quite a bit of option contracts. Okay, you look at something like, and Twitter isn't even the most like liquid. Apple, almost 40 million shares today, but it did almost 2.65. Now, something like Apple, okay, or something like Twitter, and we can use these interchangeably. Okay, on what expectations of price are likely to be. And you're like, sure. Look at this option. It's 16 days out from now. Right on the screen are. Pull up a number of 438 different studies currently available in here. 38. You know what almost every single study is based on? See if anybody gets that one, huh? It's the question of an evening. And now I'm going to tell you there are some wild studies in here. Okay, Mesa breakaway concealing baby swallow. Ooh, I got to have a couple of those. Okay, within the charts, 430. Volatility, but the volatility is extreme from always throws when not Fauci's are forward-looking based on previous price action. What the option market gives you. For like it's called the future. Everybody wants going to go. I'm not going to tell you where the stock is going to go. I'm going to let the option price often denotes stock price movement. Watch very carefully what I'm going to do. And down to what's called the straddle is the at-the-money call and an at-the-money put. Now, if you don't understand options, it's okay. All it's saying is the at-the-money call and the at-the-money put. If you had the right to buy the stock at 43, $3.20. Now, if you look at that $3.20, what it's actually telling you, okay, is that there is a likelihood of the stock moving X amount. Now, okay, when people talk about options, again, they get all like esoteric and, well, what are the options telling me? Okay, how are the options priced? In the end, how are our options priced? Time is a factor, but we can clearly see time. That's delineated right to for 2 days. Okay, the real pricing in options comes down to what's termed volatility. Volatility is equivalency to risk. In the end, what's an options price set by? It's actually set by supply and demand. Think of options as nothing more than risk metrics, and they're actually supply and demand. What that means is this: if Twitter gets wildly volatile, the price of the options will go up based on supply and demand. There's more demand for the options, the risk metric, volatility, the option prices go up when there's more demand. There's not like these traders in some room somewhere going like, turn up the volatility. In the end, okay, now that's something that a lot of supply and demand in the options market. This is kind of the out there part. That's supply and demand in the options market out there happens, okay, to have a price tag on volatility. You can measure supply and demand in effect by looking at the volatility. Now, on the right-hand side of the screen, what you're actually seeing here, it says 45%. One of the greatest things about volatility in an options chain is that the volatility in an options chain can correspond to the volatility in any options chain. 5% volatility. You're like, I don't know what that means. Let's just see what it says over in Apple. Remember, there's all these definitions for volatility. Volatility is a risk metric. And options, what they're actually doing for us is they're delineating what that risk is likely to look like in the whole world spends time right here. Again, you get the market pundits, they're on TV. Well, I think the stock, yeah, okay. Options. The options in Apple are volatile than they are. Somebody, but it basically means of like 42%. Extreme. 17. What I'm actually teaching product to the other. Why? Why even do this? First of all, evening that may never trade an option. But don't you think you should look at what the option volatility is saying about stock price movement? Okay? Look out. I'm going to use the 30-day options. Why? Just because it's a nice round number. It's about a month. The implied volatility right now inside of Tesla, the options are saying that the stock is likely to move up or down $23.21. Okay? So again, think about that. The options are telling you that the stock is likely to move up or down $23. Now, that's actually what we call a one standard deviation move, and I'm going to describe that a lot more extent over here. So there's nowhere in the option chain, the options aren't telling you if we're going to move up or down. Okay? It doesn't know. Like, options don't give you a directional bias. I know everybody wants that. Everybody wants to know, are the options telling us we're moving up or moving down? No. The options are actually telling you how far we're capable of moving. So at the very least, what you might want to grab, I always want like direct takeaways from any presentation you might listen to. At the very least, night session that you can use tomorrow. If you looked at the Don, I don't trade options, I only trade stock. That's 30 days. The expected move is up or down $23. That's probably going to change how you allocate capital. Capital allocation is like the underdog. Nobody ever wants to talk about that. If you over allocate, you're going to set yourself up for failure. Because when you over allocate, what does it do? Oh, the pressure's on. The stock is moving against me. It's a horrific feeling. Okay. People are familiar with volatility is right around 25%. But you got to ask yourself, man, what does that 25% really mean? Okay, let's explain that. Briefly, I'm going to explain this. That is what is termed implied volatility. Now, the implied volatility, got to bear with me on this one. This is a really fun definition over here. The implied volatility, the way it works is this. And you can see it. Okay? The implied volatility, the way to think of this, it's really measuring the options, okay, sensitivity to supply and demand. I mean, that's what implied volatility is, and I already kind of mentioned that. But in context, what does it really mean to have 25% implied volatility? The way to describe that is if you have a stock trading at $100, think of a stock just trading at $100. Apple's pretty. Okay, I know the vol is 24.75, but you get the point. 25% volatility on a $100 stock. The volatility happens to be standardized for 1 year in time. What it really means is the stock is capable of moving about up 25% or down 25% within 1 year. That's what the implied volatility really delineates. Okay, so people always ask me, like, well, what in context does a 25% volatility really mean? Well, it really means the stock is likely to move up 25% or down 25%. But the volatility, the number itself, is standardized for 1 year. And the bottom line is what that means is a $100 stock can move up 25% or down 25%. That basically means the stock can move up $25 or down $25. Okay? In fact, if you look at 526 days and it's giving a volatility, move about $27. But the news for you, you don't care about doing, because right next to this implied volatility is what's termed expected move. Okay, so bear with me again here for a moment because I don't want to keep this definition too long, but it's really important that if you can understand what volatility is, you will understand what probability is in the marketplace. Volatility, which is currently 25% or roughly 25% in Apple, that 25% volatility correlates, okay, directly, but plus or minus $4. I know it's $3.99, and it just basically it's $4, plus or minus $4. Now the plus or minus $4 is a 1 standard deviation move. What is 1 standard deviation move? 68% of all occurrences. So what you're learning, and again, I'm going to take this into some really specific trade examples here in the next minute or two. What I'm actually explaining here is it doesn't say that Apple has to move within a $4 ability, though, associated with Apple moving up or down $4. Okay, it kind of says, like, if you brought this over to a chart. So let's bring it to a chart. Let's just take the chart and let's go to the next 3 months on a daily. A few lines in here. So again, I'm trying to just draw it for you on a chart. What that ultimately $4 is right around what price? Okay, about $99. All right. Then it says it can move. Well, it says about approximately 16 days. You can see that I've left room open to the right. What is 16 days from now? Shallow expectation. What I'm getting you guys is that you can take to what. Why is this so important? Here, we're actually putting option pricing is saying about what, where the stock, tell you which way it's going to go, but it's telling you what it's capable of being able to do, and that is a critical point. Now, go to all down to volatility studies, and again, up to what's called probability of expiring cone. distribution curve. It's at within the chart. It's actually, you'll see my little lines that I drew are kind of crossing, right? For an expiration. Again, it says 68% of the time we're going to be in this curve. Immediately, you should think to yourself, well, what's going to happen to me the other? What? The other 32% of the time. Yeah. Let's go back over to volatility. The volatility now, you can start to put it almost in what I said into context. What does that mean? It means Apple's volatility, options. Okay, options are options. I don't care whether they belong to Twitter. I don't care whether they belong to Apple. Options are, they're juiced. What does that mean? Okay, it means there's a lot more supply and demand over here. The volatility is kicked up, which means there's more demand for options. There's a much higher risk metric. Okay, 45 volatility. It's not too extreme. It's not too wild, but it's getting there. It's likely to move $3.36. Immediately look at the $3.36. You're like, but Apple can move $4. Basis? Come on, Twitter. Half the price, pretty much, of Apple. Much because the volatility is almost double. Then I always ask people this. What do you think a volatile stock is? Okay, there's a lot of misnomers on what a volatile stock might be. So think about this. All right. What is a volatile stock? And you guys can even type in, like, what do you think a volatile stock is? Is Tesla a volatile stock? Again, you have to put these things in a context. Tesla actually has less volatility than it becomes, if you will, more volatile. And again, feel free to chime in any underlyings that you want. I'm reading the Q&A in here. If you've got if you've got a stock that you think is volatile, let me know. All right, let me know, because I want to actually bring a few of those up over there. Perfect. Somebody actually Pandora has almost 60% implied volatility. They're exactly right. Okay, Pandora is a volatile underlying in comparison. Necessarily a good thing. Think volatility is all around, is all about. Product, but it only has about a 37% volatility, which is Yelp. Perfect. Okay, Yelp is also on Yelp. If you trade illiquid product, Yelp has almost the same volatility as Pandora, 57%. Okay, so now when somebody's coming in, they're piling them with different stock names over here. It's actually great, right? And by the way, they're just people are chatting in some different names and so forth. You guys aren't missing anything. By the way, somebody said Netflix. But it's perceived to move a lot. Because a $430 stock, it whips around $10-15 a day, but on a percentage basis, that's nothing. It really isn't. It's not very high. The volatility in there is not nearly as high as you may have believed it was. Okay, so there's some fun ones in here. I love when people fire in a couple of different stocks that might be considered volatile. Here's one that I've been battle of the in here. It's almost 80% implied. What's the VIX? The VIX. Okay, the symbol over here is VIX. The VIX is 16.37. I'm going to have fun with this because almost every day, no matter where you're trading, if you turn on, any financial, they talk about the VIX. The VIX. What is it? It's funny because it seems to be quoted all the time. They're like, the VIX went up substantially today. Well, the VIX should go up substantially. Why? I want to see something else. Has 100% volatility. What does that really mean for you? It means that the volatility in the overall markets, okay, is wild. We just brought up all these different, and we brought up Pandora, and we brought up Tesla, and we brought up Netflix. Nothing can touch the volatility of the overall marketplace. The unknown of the entire marketplace is what. Now, what's interesting is the understanding you have on the means. People are shocked. We're hitting a patch of volatility. That's not necessarily up for debate. Since last Thursday, the S&Ps were down big. Last Thursday, last Friday, they were down 10. Monday, we had a rally up 15 points. Tuesday, we sold off a bit again. Today was actually rather docile and probability and volatility really mean. It can help you gauge, okay, likely movement. Probability, it's not telling you which way the market's going to go. One last thing I'm going to describe before I go into a little bit more, detailed trade analysis here. One thing I want to describe is if you look at Twitter right now, and Twitter is trading at $43.46. So Twitter's almost trading at what? On $43.50. I get too detailed into the options, but I want you to know that the price of the calls is about $1.14. The price of the puts is trading at about $1.19. Okay. The reason I'm actually clicking on these and highlighting them is buy, price of the sell. Almost an identical price. Why? Because at that point, options again, they're not telling you anything about which way the stock is likely to go. But the options, the pricing themselves, again, it delineates how far a stock can likely move within a given period of time. And I say likely. The reason I use likely is because just because you have the ability of an occurrence, if somebody says, hey, there's a 90% chance that this event occurs. Great, there's a 90% probability. So what do? You lay some kind of a trade on those odds. You're like, yeah, I like those odds, huh? I got a 90% chance of making money. But that doesn't tell you that you are going to make money. Because the other 10% of the time, how much are you going to lose? Okay, so I want everybody thinking, all of a sudden we're taking Twitter, which is what? 44%. Then we're extrapolating volatility into how far the stock can move in a given period of time. Okay, this movement of $4.07, that's can't crack outside that range. It says that there's a very high likelihood that we're going to move within the $4 deviation, either $4 up or $4 down, and we're likely to stay in that range about 68% of the time. Okay, once you have ultimately gone through, understand a little bit about, for instance, expected move, we can actually give you of each one of these strikes. Strike, for instance, is 45. That is where you can buy or sell a particular option. The way to think of it, if you don't understand options, that's fine. 45. All right. What is the likelihood of this stock, Twitter, 23 days from now? This is what we call a probability ITM. In the money, you go down to options, theoreticals. If you're not on Thinkorswim, it's okay. Just download it. You go right onto the TD Ameritrade website. On the TD Ameritrade website, okay, go under your trading tools in there and look for Thinkorswim. Find it, download it. You don't have to have like a spectacular computer. Somebody inevitably asked me, can we run on Mac? Of course we can run on Mac. It was built on a Mac. But you go down to options, theoretical. Click on one of the options, theoreticals, and Greek. Go probability in the money or probability out of the money. Okay? All that means is above 45, what's the probability of being below 45? It doesn't say that you have a probability of making money. Okay? There's a 64% chance that we're going to be below $45. You're like, great, sign me up for that one. Again, whether you're trading stocks, options, futures. As I started off this conversation tonight, I said the idea of probability and volatility, it transcends all the different products you trade. Doesn't matter. And I use that word products because I don't care what products you trade. You trade a futures contract, hey, futures, it's a highly leveraged product, can have a bit more risk. But you're going to look at probability and volatility the exact same way. You're going to look at Twitter. If you do some trade and you need the stock above, that's what I want to get you guys. 5.49% chance of that occurring. And that doesn't include transaction costs of whatever trade you have. So immediately, if you need the stock above 45, you realize that right off the bat that you have about a 35% probability, okay? And if that's your break even, that's a 35% chance of getting your money back. Let me open up a few more strikes. You can let's type in 16 strikes. I'm doing a trade that has an 80% probability. Well, yeah, you can go out there and you can do a trade and you could sell an option that has an 80% chance, okay, of what? Of expiring worthless. But that doesn't necessarily say you're going to make money. Because when you're wrong, oh boy, you could be wrong big. But I like the idea of describing trades to clientele based on probability. This is not based per se on quote unquote what. Okay. Chart. That is about what I think. What I'm saying is, who cares? Who cares what I think? You shouldn't care what anybody thinks. You should build your trades off of probability. Whether you're right, whether you're wrong, having a high probability, again, doesn't necessarily say you're going to make money. Okay, but I think and here's a $43 stock that you probability in the money. Again, whether you're going to trade the stock, whether you're going to trade the options, neither here nor there. If you need the stock at 47 and you realize, I bet you anything, you're less likely to do that trade. That's where probability in the money, and again, that's one of the bigger takeaways from tonight's session. As I say, I always want everybody to leave with like something, okay? Trading strategy, to me, is everything, okay? What I think is going to happen in the market always has to be secondary, because I can tell you what, consistency. How are you going to be consistent in, any predictability, especially if the market gets more volatile, like it has in the last 5 trading sessions? From last Thursday to today, we've seen, again, 5 significantly more volatile trading sessions. You can't have consistency, okay? Traders that are really probability and looking at probability in kind of context here in the trade tab, again, can help substantially in really building. What should I do if I'm bullish over here? Well, if you're bullish, okay, and you need the stock above, if you need that stock, 65% chance of that happening, okay? You're like, I don't like my trade anymore. You're ruining this for me. Good for you. I'm trying to give you, kind of definitive probabilities. Now, probabilities, immediately people are like, well, what are these things based on? The probability, the option, the degree of accuracy. Now, probability is constantly in flux. However, when we put our trade on, okay, what would you rather do? Just take a guess or just say, hey, listen, this trade approximately right now has about a 32% probability. It's based on a theoretical model, okay? It's priced at 43.46. The time the market opens tomorrow, that price changes. It's good to know that you have something to base trades off of other than, I think we're going to bring back around Tesla, okay? Because Tesla, they're interested in, and you are, when I say risk mitigation, in essence, defined risk type trades, okay? Again, I'm not gonna harp on this too much. When I say defined risk type trades, going out and do trades, for example, that risk $1 to be able to make $1. Now, somebody doesn't like that, I'm risking $1 to be able to make $1. But it's okay, because if you're right more than you're wrong in what you quote unquote think, those trades may make money over time. One place to continue to do a little bit of like homework after tonight, in markets, one area you might really want to explore the world of vertical spreads. These vertical spreads, to harp on those for a moment, the reason I think it's so important to understand the vertical, if we are hitting a more serious patch of volatility in marketplaces, the vertical spread can be one of the most effective ways to define your risk. And if you go out and do trades that only risk a few $100s here, okay, the worst you're going to get is, ooh, that hurt, I lost $250, or ooh, I lost $400. You're not text of, wow. We saw stocks on Thursday the day. Okay, the entire market was down like 2%. Again, I'll tell you, is this the sell-off? Broader markets. There's one thing I do know. I grew up around. This has been the rally has really ensued since roughly 2009 until right now. It will be unequivocally one of the most hard-fought rallies to be able to break. When it does break, and when the market does eventually sell off, you will not understand that we're in the midst of until it's already too late. That one, okay, I'll hand to your thing that is in the marketplace. We are going to have some of the most wild up. We'll have days where the S&Ps are down 40 points, followed by a day where the S&Ps are up 30. We'll have days where the S&Ps could be down 60 points, followed by an explosive 60-point move to the upside. Okay, and you have to recognize some of the going to be entering into that phase, but this is going to be one of the most hard-fought rallies to ever break through, right? When it's getting a little bit higher, let me tell you, by then it's too late, okay? When you're already looking at things like volatility, that right now, the VIX itself, 16 to 30 overnight, okay? That what would your positions right now look like if volatility were to explode in the marketplace? And you're like, well, I don't really get it. What are you saying? If volatility explodes, Don, I might not even have any option trades on. Volatility doesn't impact me. There's one Thursday scared you at all. Last Thursday scared you. The S&Ps moved 40 points in one day. Think about what you either made or lost last Thursday. Okay? I'm not saying you're ever going to trade this product. Just go in there and look at what the SPX is capable of doing. Is plus or minus $71. Now remember, just in one day, the other day, we saw a 40-point move in a day in the S&P. So we're probably only going to move $70. Imagine if volatility doubled overnight. That entails a 140-point move in the S&Ps in the next 30 days. That'll wake you up, because now you're actually extrapolating. Think about what you lost on Thursday, and those losses could be magnified on a scale that's almost unmanageable, 3-4 times the loss, and that can happen in about over here is to bring context to what volatility means to your portfolio. Okay, and an understanding of volatility can also help you construct probability around your trades. Now, additionally tonight, recall that if you want a little bit more information on probability volatility, there's a few places you can go. Number one, where it says support chat. Go to support chat on the Thinkorswim trading application. Go minutes though of education, just like we're doing here tonight. The swim lessons, they run live, okay, on the Thinkorswim platform, okay, Monday through Friday, every trading day. We're live. We're live from, okay, Eastern time is 11:30 to 2:30. That's Eastern time, 11:30 to 2:30, Monday through Friday. Over there, and you can shoot us emails if need. Archive, type in my precisely what I discussed after tonight. Swim lessons at thinkorswim.com. Again, swim lessons at thinkorswim.com. It's not just a generic email address. It goes to myself and everybody else in the swim lessons crew. Whether you have a stock, an option, a chart question, you fire it in over there. If you have any Okay, our general support email address, they're there right now, support@thinkorswim.com. They can help you, walk you through any questions you may have. They can walk you through account not approved for option. Right? They can actually help you with it, walk you through that on support at Thinkorswim. Last but definitely not least, if you're newer to the Thinkorswim trading application, okay, and the actual software is a little foreign to you, let's help you ways to do that. You can actually get a narrated tutorial. It's a 30-minute tutorial, okay, that is one-on-one. We can set up expressly a 30-minute demonstration, okay, with one of our representatives. They'll call you in the convenience home over there. Additionally, go into the Help tab of Thinkorswim. You can launch the Learning Center. The Learning Center's got a ton of tutorials and stuff, but for some people, it's not necessarily enough. Just a refresher to go through there. Okay, email us if you need us. Thanks a lot, everybody, for joining me tonight. We'll be back on swim lessons tomorrow, again, 11:30 Eastern Standard Time. Thanks a lot, everybody. Have a great night. Bye-bye.